Bloomberg Audio Studios. Podcasts, radio, news.
This is the Closing Bell on the Stock Movers Report. The companies making moves at the close of U.S. trading with Carol Massar, Tim Stenovec, Romaine Bostick, and Scarlet Fu.
The worst performer, Fair Isaac, which also had a tough day yesterday, right? It's down another 16% in today's session. Best performing name, it's going to be one of my gainers, guys. It's Alphabet. But
deep tease.
Take it away, Scarlett.
All right, let's take a look at the IMAP. A lot of red there. You mentioned Alphabet, Carol, and Alphabet, as well as Netflix, but just barely, are basically supporting the communications services sector. And you can see that's the one lone slice of the pie that is green. That group is up about 2/3 of 1%. You have three sectors down at least 2%. Two of them are rate sensitive, REITs and financials, and healthcare losing 2.4% because of United Health.
All right, guys. There were a few gainers, as Scarlett just mentioned. Alphabet, certainly among them, up as much as 5.5% at its highs, finishing the day with a 2.8% gain. It was pretty much your biggest gainer in the S&P 500, NASDAQ 100. What happened is the company said it will offer AI mode in search to all U.S. users. So kind of AI mode.
Like turbo mode.
Like, exactly.
You got to pay for it, but okay.
Is that like a la mode or what?
Hey, it's showing its commitment to redesigning its core business to keep pace with its new rivals. You know, AI mode, you do anything with AI and everybody gets excited. But right, as Alix said, you're going to have to pay for it. DeFi development, folks, small market cap, $438 million, but it was up 40% here pretty much at its highs, all-time highs, a blockchain developer. And this is after Solana said it instituted a 7-for-1 forward stock split today. So we saw this one also benefiting in the trade. And here's another one. I don't really talk about it a lot. DY is the ticker. Dycom Industries, $6.5 billion market cap. Builds fiber optic systems for cable TV operators, boosted its year forecast for contract revenue growth. And so this one definitely an outperformer, and the stock's up about 30%. There's a few other honorable mentions like Canada Goose and CoreWeave, but you'll just have to go to the Bloomberg to check that out.
Ooh, okay. Nice tease.
Yeah.
Hey, easy job for me today with the decliners. I do want to start with shares of Apple falling 2.3%. It was the biggest decliner on a points basis in the S&P 500. Shares fell right when we learned about OpenAI acquiring the AI device startup co-founded by Apple veteran Johnny Ive in this nearly $6.5 billion all-stock deal. But that was also the time that we got that soft 20-year auction that led yields to spike. So worth noting, not necessarily those two things correlated, but you can't talk about Johnny Ive without talking about his history at Apple and the way that Apple has missed out on the AI boom over the last couple of years. Check out Mark Gurman's reporting for that. Also, shares of Target down by 5.2% today. Shares fell close to 8% at one point in the day. The company cut its sales forecast following a sharp pullback in consumer spending and a hit from tariffs and boycotts. A little different than what we saw from Walmart last week for a couple reasons. One of them has to do with the fact that Target sells more discretionary items to consumers rather than groceries, whereas Walmart has about 50% of its sales as groceries. So those are not discretionary items. Consumers have to buy those things, so it buffers in an environment such as this. Target said Wednesday it expects net sales to decline by a low single digit this year, down from previous guidance for an increase of about 1%. Questions also being raised about Brian Cornell's tenure at the company and the turnaround.
Here? Yeah,
what's that?
What's going on with Brian Cornell?
Well, look, in 2022, they said he'd be there for at least 3 more years.
Yeah.
And he's had many years. He's been there since 2014. Mm-hmm. He's a veteran of Walmart. He was the head of Sam's Club at Walmart. Yeah. He's at Pepsi also.
Got a great pedigree.
He did.
And have you looked at the relative performance?
Don't you feel like we've been having this story, this conversation about Target's turnaround for years at this point?
Yes, I do. 100%.
Yeah.
Like they had inventory issues in COVID, then it was the DEI issues.
Right.
Like there's been issue after issue that's Target specific in many ways, and then not the macro, which is also a problem.
I just want to put this into perspective. Over the last 12 months, shares are down 40%. Walmart shares are up 48%. You pick any of sort of the other competitors, whether it's the dollar stores, BJ's, Costco, you also see similar extreme underperformance relative to some of those.
You can't say it's all because of discretionaries and not having growth.
I don't think it's cool anymore. I used to love when it used to do the designer collaborations, and it was kind of fun, and they would have people line up
I remember
for hours. They just, I don't know. I go in there and I feel like it's the same old stuff.
Yeah, and just maybe a little bit more expensive.
I was just going to say that.
A teeny bit more expensive.
You never leave Target without at least spending $100, $150.
True.
All right. You want to hit yields, Alex?
Oh, I do, yes.
Yeah.
Yields, they moved higher. It was the big story of the day, that 20-year failed auction. They were already trading heavy on the back end before the auction, but after that auction, you definitely saw a spike higher. The 30-year yield now at the highest level since October of 2023 did not see buyers come in once the 30-year breached the 5%.
All right. Well, speaking of a spike higher, shares of Snowflake, the enterprise software company that's been trying to turn itself into an AI company, up 3% in the after-hours trade after just reporting earnings. First quarter revenue did beat at about $1.04 billion. First quarter adjusted diluted EPS also beat at about 24 cents a share. The company says that for the second quarter, it is expecting revenue in the range basically of 1.04, so no real range here, but that is above the average of analyst estimates by just a hair. The company also saying that for the full year, it expects its product revenue to be $4.33 billion. That's an upgrade from its previous forecast of $4.28 billion and above street estimates of $4.29. The share is now up 6% in the after-hours trade.
All right, let's look at Urban Outfitters, the specialty apparel company. Net sales for the first quarter beat analyst estimates. And if you look at the two biggest brands, Urban Outfitters itself and Anthropologie, those numbers also coming in better than anticipated. Segment sales, so comparable sales, up 2.1% when analysts were looking for a drop. No indication yet of the outlook, so that'll be perhaps in the earnings call with any kind of commentary about tariffs and all of that.
All right, one more before we bail out here. You got Zoom Communications. It's bouncing around in the aftermarket, up about 1.5% here. This is after the company came out and boosted its revenue guidance for the full year. The guidance beating the average analyst estimate. And it also sees adjusted EPS 556 to 559, had seen 534 to 537, estimates 536. So that's bouncing around, up about 2%.
And just real quickly before you go, Carol, Lumen shares right now spiking more than 20% here. The main headline, AT&T is going to buy Lumen's mass markets fiber business. Those shares up more than 20%.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.